I can feel it starting again. That buzz around Ethereum is coming back, and it's not just a hunch. Over the past 2 months, we've seen capital flooding back into Ethereum. And I'm talking big numbers. Even just a couple of months ago, when the Ethereum ETF buzz was still fresh, seeing just a few $1 million flow into Ethereum in a single day felt like something worth talking about. And now, we're looking at $50 to $100 million a day, and it's becoming almost routine. That shift is huge, and it really shows how fast momentum is building around Ethereum. But here's the part no one's talking about. We're now seeing major companies starting to actively accumulate Ethereum. Why? Let me break it down with a story that caught my attention. Bit Digital, a former Bitcoin-focused company, has shifted its strategy completely. They've moved away from Bitcoin mining and gone all in on Ethereum. And the CEO didn't keep this move quiet. He went on CNBC's Crypto World to explain exactly why, and according to him, their goal? To become the largest Ethereum treasury among all publicly traded companies. No more Bitcoin mining. Now it's all about Ethereum accumulation, staking, and long-term treasury building. So what's the logic behind this move? He said something powerful. Ethereum is the next wave after Bitcoin. And honestly, that shift in mindset is becoming more and more common. Bitcoin's story is well established. It's a store of value, a hedge against inflation. We've seen individual investors buy into that, but now companies are joining in. Still, there's a problem. With Bitcoin now sitting around $121,000, companies are realizing it's becoming harder to accumulate meaningful amounts. Take companies like Remix Point or H100. I'm sure they can raise millions, but how much Bitcoin can they really buy with that at today's prices? Not much. So naturally, their attention shifts. They're asking, where can we deploy capital and still see high upside? And Ethereum is stepping into that spotlight. It's not just cheaper, it's evolving. Ethereum isn't trying to replace Bitcoin's role as a store of value. It's offering something different, a programmable, yield-generating, innovation-powered network that companies can build on and grow with. So while the market keeps staring at Bitcoin's price, some smart players are quietly building their Ethereum reserves, not for hype, but for what comes next. Next, he made it clear. Ethereum isn't just another coin. It's an entire technology platform, one that's attracting trillions of dollars on-chain. And here's the key. The value being generated on Ethereum through transaction fees, activity, and smart contracts, it flows back to Ethereum stakers. This is something you don't get with Bitcoin. Because Ethereum operates with a staking model, anyone holding Ethereum can stake it and earn a portion of the network's revenue. Every time someone uses Ethereum and pays gas fees, a piece of that goes right back to the people who are invested in the network. That's a whole different level of alignment. And it doesn't stop there. Ethereum also allows for the tokenization of real-world assets, stocks, real estate, even fine art. Literally anything can be represented as a digital asset and traded on the blockchain. The CEO went as far as to say, Ethereum is the only foundation for the future of digital finance. There is no second place. And here's the thing, nothing the Bit Digital CEO said was wrong. But let's be real. If we want Ethereum to fully scale, the base layer, layer 1, still isn't fast enough. That's why layer 2 solutions are essential right now. But guess what? The truth doesn't always matter as much as the narrative. You can talk speed, You can talk scalability, you can bring up all the tech arguments in the world. But in the end, the story is what moves markets. If the story is compelling, it attracts attention. If it's not, people tune out. And Ethereum right now, it has a compelling narrative. It's not just BitDigital backing it. Let's talk about Fidelity. Yes, that Fidelity, one of the largest asset managers on the planet with $4.9 trillion under management, they recently published a research note on Ethereum, but what's important is who they're writing it for. This report isn't for crypto natives like us, it's for traditional investors, the ones who trust legacy names like Fidelity, to tell them what matters in this new world. So, what exactly did Fidelity say in this report? Let me break it down for you. They analyzed Ethereum as if it were a country. That's right. Fidelity used the framework of national economics to evaluate a blockchain. They compared Ethereum's activity to something like digital GDP, a gross domestic product of the on-chain economy. And they broke it down into 4 key sectors. Just like in a real-world economy, consumption, gas fees on Ethereum, Fidelity equates them to sales tax, a form of digital consumption. Revenue generated by decentralized applications, that's like transaction fees in a service economy. And NFT sales, those are treated like high-value digital exports, the luxury goods of the digital world. This mirrors the exact trends we were talking about back in 2021. NFTs, gas fees, DApp, activity. It's all being reframed in traditional economic language. Because for many institutional readers, this is their first exposure to Ethereum beyond just knowing it's not Bitcoin. Government spending, they compared Ethereum's issuance model, like validator rewards and ecosystem grants, to government subsidies or stimulus packages. Every time new Ethereum is issued to pay validators or fund ecosystem growth, Fidelity says it's similar to government spending to secure and develop national infrastructure, investment, staking Ethereum. Fidelity calls it the blockchain equivalent of putting money in the bank to secure the network. Liquidity pools, they compare those to national reserves or capital funds that facilitate commerce and stabilize the system. Net exports, imports and exports. Here's where it gets interesting. When assets move across blockchains, say between Ethereum and other chains, Fidelity views that as cross-border trade. And when decentralized infrastructure like stablecoins or DePINs, decentralized physical infrastructure networks, are built on Ethereum, they compare that to exporting high-tech products from a sovereign nation. In other words, Ethereum is more than a network. It functions like a nation-state with its own currency, economy, banking system, and global exports. Ethereum, in this analogy, is the national currency. It's used to pay for services, transaction fees, serve as a unit of account, act as a store of value, just like a reserve currency or even gold in the traditional system. And then they dropped some powerful numbers. In 2023, Ethereum accounted for 68% of all DEX decentralized exchange trading volume, 31% of all lending deposits in DeFi. By 2024, its DEX dominance grew to 74%, while lending share dropped to 21%. So what's the big takeaway? Fidelity calls Ethereum a true digital economy, a platform where Ethereum acts as both currency and store of value, much like gold once did in traditional finance. Now, you might read all this and think, okay, some of this info feels a little outdated, or maybe not every claim is 100% accurate. And that's fair. But here's the point. That's not what really matters. What matters is this: there is a clear strategic effort underway to shape how Wall Street investors think about altcoins, because when it comes to Bitcoin, the debate is mostly over at this point. You either like Bitcoin or you don't, but nobody really believes it's going to disappear anymore. Even if you're not a fan, you still recognize Bitcoin has carved out a solid role in the traditional financial system. That's established. But here's the real question. What comes next? Once you look beyond Bitcoin, you've got a jungle of altcoins, Ethereum, XRP, BNB, Solana, and the average institutional investor is asking, what are these? Should we care? Should we invest? And that's where companies like Fidelity are stepping in. They're not just comparing coins, they're shifting the framework. They're saying, don't think of Ethereum versus XRP or BNB versus Solana. Instead, think of each as an entire ecosystem, like a country with its own rules, economy, and structure. Each one is fundamentally different. And right now, Fidelity is focusing their attention on Ethereum. Is this push going to work? Who knows? We'll have to wait and see. But one thing's for sure, Ethereum's story is spreading, it's picking up speed, it's gaining serious traction in traditional finance circles. And speaking of high-profile supporters, let's talk about Tom Lee. You probably know the name. Tom Lee has been a long time vocal supporter of Bitcoin. He called it early. He told people to pay attention when Bitcoin was still at $2,000, even $5,000. And now he's back. This time waving the flag for Ethereum. Tom Lee recently launched a new company called BitMine, and they've already made headlines by purchasing $250 million worth of Ethereum, with plans to continue accumulating more. And when Tom Lee speaks now, people listen. Why? Because a lot of investors remember ignoring his advice about Bitcoin. They missed the run. So when Tom Lee says, don't sleep on Ethereum, and he's backing it with money, not just words, it's turning heads. That's the bigger picture behind Ethereum right now. Hope you found value in today's video. If you'd like to support the channel or check out the special offers I've secured exclusively for the Crypto with Harry community, you can find the link below in the description. And hey, if you're using exchanges, remember, use them to trade, not to store. Keep your long-term holdings safe. Thanks for watching, and I'll see you in the next video. Take care.